If you're looking to make some serious profits in the stock market, you need to know about the LEAPS option strategy. This is a complex but powerful way to trade options that can produce huge profits in a short period of time. In this video, we break down the LEAPS option strategy and show you how to use it to your advantage. So if you're ready to start making some real money in the stock market, keep on listening. We discuss what are LEAPS options, how does the LEAPS option strategy work, LEAPS options versus buying stocks outright, when is the best time to use LEAPS options, how do we put on a LEAPS options trade, and we will utilize and show a real LEAPS option example on the Tastyworks trade platform, and we will end with how do we manage LEAPS options strategies. So let's get started. So what are LEAPS options? LEAPS options are long-term options that have an expiration date that is further out than traditional options. The name LEAPS stands for Long-Term Equity Anticipation Securities. LEAPS options were created in 1990 to give investors the ability to trade options with a longer time frame. How do LEAPS options work? The LEAPS option strategy works like this. You purchase a LEAPS call option on a stock that you believe is going to go up in price. The nice thing about LEAPS options is that they are much cheaper than buying the stock outright. So if the stock does go up in price, your profits can be huge. I like to purchase call options that are 1 year or more out in time. The strike price that I like to use is deep in the money, since that will give the most bang for the buck. It also most closely replicates the owning of 100 shares of stock. All right, let's compare LEAPS options versus buying stocks outright. One advantage of buying LEAPS options over buying stocks outright is that you don't have to put up as much money. When you buy a stock, you're responsible for 100% of the price. But when you purchase a LEAPS option, you only have to put up a small percentage of the price. This is called leverage, and it can be a powerful tool when used correctly. Of course, leverage can also work against you if the stock goes down in price, but that's why it's important to only use this strategy on stocks that you feel confident will go up in price. When is the best time to use the LEAPS option strategy? The best time to use the strategy is when you're bullish on a stock and you have a longer term time frame in mind. For example, if you believe that a stock will be going up in price over the next year, a down market or a bear market is often a great time to buy LEAPS options. This is because stock prices are usually depressed during these times, and you can get a great deal on the LEAPS option contract. Okay, let's look at placing a LEAPS option trade in DocuSign. We're going to go to the Tastyworks trade platform, click on the trade tab, and we're going to be in table mode, and we will look down here past 352 days, so past 1 year. We're going to go to the January 2024 options, and let's look at the 40 strike call option that trades for $36.20. So for 100 shares, that's $3,620. But actually, we're going to be at the mid price between these two, $35.90. We would hit review and send, and that trade would be placed. And we're going to control 100 shares with $3,590 versus $6,766 is what it would cost if we were to buy the 100 shares outright. So about half the price is what we would be paying. And we can go to the curve mode and then see where when the stock price, it takes into account the $3,590 that we're paying up front. So it does need to raise in price above, around 80 in order for us to start making money. But then when we do, it is just like owning 100 shares of stock. So it can really add up fast. You can see where the stock was up at 280 just in September of last year. If it were to go from 67 where it is today up anywhere near there at 280, we make $20,000 basically. So this strategy can be quite powerful. You hit review and send, and the trade is placed. Okay, so how do we manage the LEAPS options strategy? There are different theories on managing LEAPS options trades. I'll give you a couple of different methods that are commonly used. Then I'll tell you what I like to do. The first method is to set a price target for the stock and sell the LEAPS option when the stock hits your target price. This will allow you to lock in the profits and avoid letting the trade run against you. The second method is to hold the LEAPS call option until it expires. This is a more aggressive approach, and it can lead to bigger profits if the stock continues to go up in price. However, it also carries more risk because you're letting the trade ride. I like to use a combination of both methods. I'll set a price target for the stock and hold on to the call until it hits my target. But I will also sell half my position at the target price to lock in some profits. This way, I have some downside protection if the stock reverses course, but I still have a chance to make some big profits if the stock continues to go up. The LEAPS option strategy can be a great way to profit from stocks that you're bullish on. It allows you to get exposure to the stock for a fraction of the price of buying it outright. And if the stock goes up in price, your profits can be huge. Just be sure to use the strategy only on stocks that you feel confident will go up in price, and monitor your positions. Do you have any questions about LEAPS options? Leave a comment and let me know. Thanks for watching. Be sure and check out optionsfinanceprofits.com and the links below. Be sure and hit subscribe and like, and I'll see you in the next video.